to is pertaining to the calculations involved in intraday and margin call. Okay, so this is what you will get to learn over here, the calculations involved in intraday. First of all, what do you mean by intraday trading? Buying and selling on the same day. Buying and selling on the same day. That is intraday trading. So basically, it's a leveraged trading. What do you mean by leveraged trading? Leveraged trading as in with less investments, you will get exposure to high value trade or contract. Okay, high value trade or contract. So I'll explain this with an example. So this is leveraged trading. Okay, so you are basically investing less, but you are getting exposure to high value contract. So for example, you have 100 rupees in your hand. Okay, and the value of the share is 500 rupees. So if the value of the share is 500 rupees, so you want to do a trade for 500 rupees. Okay, so this is the value 500 rupees. However, the amount that you have is only 100. So I will call this as initial margin that you have in your hand. Initial margin is 100. So that means, let's say that this 100 of 500 comes to 20 percentage. So initial margin is 20 percentage. Okay, initial margin is 20 percentage, and maintenance margin is, let's say, maintenance margin is, let's say, 10 percentage. Now what is this maintenance margin? Maintenance margin means minimum this much of money you should be having. So this is 10 percentage of the traded value. Okay, that means 10 percentage of 500, and this is 20 percentage of 500. So when you are entering into the market, that time you should have 20 percentage of 500. That means 100, and minimum at any given point you should have at least 10 percentage. Okay, later on when the stock price comes down. Okay, so at what time you will have to pay more again. So that's what we are going to calculate now. Okay, so the formula to calculate this margin call means when you will have to again pay. Your broker will call you up and you will have to pay to the broker again to bring up your balance. So margin calls formula is P0, that means current price into 1 minus initial margin divided by 1 minus maintenance margin. So right now the price is 500 into 1 minus initial margin is 20 percentage divided by 1 minus maintenance margin is 10 percentage. So if I calculate all this, it will come to 444.44. Okay, so 444.44 means what? When the price comes to 444.44, the trader will have to again pay more. Okay, he will have to again pay more to be in the trade. Okay, yeah, and let me just calculate this further to make it more convincing. Now when I say 500 you entered into the contract, and let's say it has come down to 444, that means you have lost how much now? 500 minus 444.44. So this comes to 500 minus 444.44. It comes to 55.56. Okay, 55.56. So you have lost this much of money. So this much of money comes to what percentage? 55.56 divided by 500 into 100. So that comes to 11.11 percentage. 11.11 percentage. So that means you entered into the contract with 20 percentage minus 11.11 percentage comes to around almost 9 percentage. Okay, so 8.89 percentage, which is almost equal to 9 percentage. So the rule is like, you are supposed to keep minimum 10 percentage. That's the agreed one. So because you have already lost 9 per 11 percentage you have already lost. Okay, because 11 percentage you have already lost out of 20 percentage. Okay, so because out of 20 percentage, 11.11 percentage is already lost. Okay, and you have only 9 percentage, which is lower than the minimum maintenance, which is lower than, okay, which is lower than the minimum maintenance margin, which is lower than the minimum maintenance margin of 10 percentage. Okay, so therefore you will have to pay more. You will have to pay more. Okay, and bring the balance back to the initial margin, to be in the contract, back to the initial margin to be in the contract. Okay, and anyways, if it is an intraday, anyways, even if you have enough balance, all such things, still by the time the trade gets closed end of the day, uh, uh, the broker will square off the trade automatically. If you do not square off, okay, around 3 o'clock it happens in India, it will be squared off. Okay, fine. So this is about the calculations involved in intraday, uh, and how you are supposed to calculate margin call. Thank you so much for watching this video. Thanks a lot.